Today, we're diving into something really fascinating, a case study of what happens when these powerful opposing forces all converge on a single company, creating what you might call a perfect storm. Let's get right into it. So, here is the big question we're tackling. What actually happens when a company that's growing at an incredible speed runs headfirst into a giant Wall Street bet against it? It's this high stakes game of chicken, and we're about to see how it plays out. All right, so first things first, let's talk about the company at the very center of this storm, Rezolve AI. Now, they're a key player in a pretty specialized corner of the AI world that's still kind of flying under most people's radar. Rezolve AI works in something called agentic commerce. What's that? Well, think of it as using smart AI agents to basically automate and totally personalize your online shopping. And their growth? It's been nothing short of explosive. I mean, this company is on track to go from pretty much zero in revenue to over 200 million in just about a year. That's the dictionary definition of hypergrowth. And when we talk about growth, this is what we mean. Just look at the scale of this jump. They're projected to go from 6 million to 210 million in revenue in about a year. It's staggering. And this right here is the core story that has investors so excited. Okay, so this is where things get really interesting and kind of weird. Despite that incredible growth story, there's this huge disconnect. You've got Wall Street analysts saying the stock could go as high as 15 bucks, but right now it's trading for under 4. This massive gap, this is where our story really begins to get complicated. Because a valuation gap like that, it doesn't go unnoticed on Wall Street. In fact, it's like blood in the water. It's attracted a really powerful counterforce, a huge number of investors who are betting heavily that this stock is going to go down, not up. A full 25% of the company's publicly available stock is currently held by short sellers. Now, to give you some perspective, anything over 20% is considered extremely high. So this isn't just a few people betting against it. This is an exceptionally large and concentrated bet that this company is going to fail. And get this isn't some old grudge against the company. This bearish position has just exploded. It's grown fivefold, from just 5% to 25% in the last 45 days alone. The pressure against this stock has been building incredibly fast. So you have to ask, why all the negativity, right? Well, it might not even be about Rezolve AI itself. Because it's a high volatility stock, some big investors are actually using it as a hedge. It's a way for them to bet against the entire market ahead of big events, like this week's Supreme Court ruling. Rezolve is just caught in the crossfire. And all of this massive bet against the company, it sets the stage for something truly explosive. See, whenever you have a short position this large, you create the potential for a rare and powerful market event, a squeeze. So what in the world is a short squeeze? Well, think of it like a powerful feedback loop. Short sellers bet the price will go down, but if the price goes up instead, they start losing money fast. To stop the bleeding, they're forced to buy the stock back, but their own buying just pushes the price even higher, creating a vicious cycle. It's a total domino effect. All it really takes is one piece of good news to set the whole thing in motion. The stock price jumps, the short sellers get squeezed, they're forced to buy, and their frantic buying is like pouring gasoline on a fire, pushing that price up and up. So on one side, you have this massive bet that the stock will fail. But on the other side, a different group is making huge bets in the opposite direction. Just last week, on one single day, traders put down nearly $600,000 in bullish trades, all betting on a sharp, sudden price jump. And we're not talking about small, casual bets here. We're talking about hundreds of thousands of dollars being wagered that the stock will hit very specific prices within just a few days. For a lot of these bets to pay off, the stock needs to jump over 30% by this Friday alone. That shows some serious conviction. And if that wasn't enough fuel for the fire, all this options trading brings another player to the game, something called a gamma squeeze. In simple terms, when the stock moves fast, the big firms that sold all those options are forced to buy the actual stock to protect themselves. This can create another huge wave of buying pressure, making any rally even bigger. Okay, so let's recap. You've got the incredible growth story, you've got the massive short position, and you've got these huge, aggressive, bullish bets. All of these powerful forces are on a collision course, and it's all set to happen in the next 48 hours. Just look at this timeline. The next 2 days are absolutely packed. There's a big business update from Rezolve AI itself, we get major inflation data, And then there's that Supreme Court ruling that has the entire market on edge. We've got a ticking clock here. Now, out of all these things, the company's own update tomorrow morning is probably the most direct catalyst. Expectations are running really high. People are looking for great news on past results, a strong outlook for the future, and a clear plan to become profitable. This could be the spark that ignites the whole thing. So there you have it. All the pieces are on the chessboard. You've got a strong fundamental growth story on one side, an enormous bet that it's all going to fail on the other, an equally aggressive bet that it's about to soar, and a whole bunch of triggers ready to go off.
And what this all adds up to is the core takeaway here. We are literally witnessing a perfect storm in the making, an undervalued growth company caught in a brutal tug of war between extreme bearishness and super aggressive bullishness, all coming to a head this week.
The whole situation is balanced on a knife's edge, and it leaves us with one final, fascinating question. When a company's real-world fundamentals collide with market sentiment and high-speed algorithms, which force is ultimately going to win? Well, we're all about to find out.